video we are going to discuss about time of supply. What's the basic purpose behind time of supply? Time of supply helps us to select a date based on which we would be discharging GST to government. For instance, in a business, there could be date of completion of service, date of delivery of goods, date of removal of goods, date of receipt of payment, date of invoice. Now there could be so many events in a business transaction. The question which arises is, based on which date should I pay GST to government? Now, time of supply helps us to answer this question. Time of supply is divided into two basic heads. One is time of supply for goods industry and the second one is time of supply for service industry. Time of supply for goods industry is provided in section 12 of CGST Act. Time of supply for services is provided in section 13 of CGST Act. The time limit to issue invoice is provided in section 31 of CGST Act. So the section 12 and section 13, whenever it is a case of forward charge, we read section 12 read with 31, section 13 read with 31. Okay. Now in goods industry there could be various circumstances like forward charge, where supplier is required to discharge tax. It could be a case of reverse charge, where recipient is required to discharge the tax, or it could be a case of continuous supply of goods. Correct. Let's cover this part, then we will move to services. Forward charge. Remember one thing, a relief is provided to goods industry that date of payment would not be used as time of supply under forward charge unless it's a case of RCM, composition or continuous supply. So forward charge, the time of supply is date of invoice or date of removal of goods / making available of goods, whichever is earlier. Remember one thing very carefully. This date of removal or date of making available is the due date to issue invoice. So when we compare invoice date with removal date. If you have not raised the invoice by the removal date, then date of removal becomes the time of supply. Sir, why do we use date of removal and making available? There could be two types of transactions. Supply involving movement, supply which does not involve movement. If a supply involves movement, then there would be a removal of goods. We will use date of removal. If a supply does not involve movement, whenever that constructive delivery happens, whenever the goods are made available to the other party, that date would be compared with the invoice date. Plus, there could also be an instance of sale on approval basis. Now, if it is a case of sale on approval basis, then the law says date of acceptance / 6 months from date of removal. Yes, careful. If there is no acceptance within 6 months from date of removal, then 6 months from date of removal will be considered as time of supply. And we will compare it with date of invoice. And whichever is earlier would become the time of supply. So this is in case of sale on approval basis. Because in case of sale on approval, we cannot use removal or making available. So the law has provided acceptance / 6 months from the date of removal. When we talk about reverse charge, for goods industry, the law says 31st day from date of invoice. Careful. 31st day from date of invoice or date of payment or date of receipt of goods. whichever is earlier. Sir, why is date of invoice not used and why is 31st day used? See, invoice is issued by the supplier. In case of reverse charge, who pays the tax? Recipient pays the tax. That's why it would not be a good practice to consider date of invoice because that's issued by the supplier. The government has given 30 days time. If within 30 days you don't make the payment or you don't get the goods, then 31st day would be considered as time of supply. Now, if it's a case of continuous supply of goods. See, what is continuous supply of goods? Goods supplied on a continuous or recurrent basis where there is a obligation to raise invoices or statements on a periodic basis. So, periodic basis, we issue the statement like gas supplied through a pipeline, kerosene being supplied through a pipeline on a continuous basis. In such cases, the law uses date of invoice or date of payment, whichever is earlier. See, instead of invoice, even a statement could be issued in such cases, giving quantitative details. So, we will use that or date of payment. In reality, statements are not issued and invoices is directly issued. So, date of invoice or date of payment is what we compare in case of continuous supply of goods. Okay. When we come to service industry, again, there could be instances of forward charge, reverse charge, and last one is continuous supply. If it is a case of forward charge, the law says check whether the invoice is issued within 30 days from date of completion. If the invoice is within 30 days from date of completion, then you have followed the law. Then the time of supply will be invoice date or payment date, whichever is earlier. Now, remember one thing, this 30 days is replaced by 45 days in case of banks, financial institutions and insurance company. If it is not issued within 30 days, then the law would use completion date, compare it with payment date, and that would be the time of supply. Again, remember one thing, if there are part payments, then there would be multiple time of supply. Plus, two key points. Whenever you are under forward charge, what is the meaning of this term date of payment? It would be entry in the books of the supplier or credit in bank of supplier, whichever is earlier. Last point, if there is an excess payment of up to rupees 1000 over and above the invoice, then the time of supply for such excess payment will be next invoice date at the option of the supplier. Let me give you an example. Say suppose I have a postpaid connection. The bill amount comes to 995 and I pay 1000 rupees. So I paid an excess amount. That excess payment is 5 rupees. What will be the time of supply for such 5 rupees? The law provides that for such excess payment, if the excess payment is up to rupees 1000, then for the excess payment, time of supply will be next invoice date at the option of the supplier. So, supplier can pay tax on that 5 rupees based on when he has received that 5 rupees or next invoice. It is his option. But this would be an amount over and above the invoice. So, first invoice was issued, then an excess payment was made. Only in such cases, this relief is available. Okay. When we talk about reverse charge, the law provides 61st day from date of invoice or date of payment, whichever is earlier. Careful. First of all, see the difference. For goods industry, 31st day. For service industry, 61st day from the date of invoice. So, in case of service industry, if you don't make the payment within 60 days, then government will consider 61st day as the time of supply. Careful. What is the meaning of date of payment for reverse charge? Date of payment for reverse charge would be date of entry in the books of recipient or debit from the bank of recipient, whichever is earlier. Careful. There it was entry in the books of supplier or credit in bank of supplier. Here it is entry in books of recipient or debit in bank of recipient. Okay. Continuous supply of service, date of invoice or date of payment or due date to issue invoice. Now what is this due date to issue invoice? See, if you notice, government is using a extra date compared to the normal time of supply. See, government is using this due date to issue invoice in addition to DOI and DOP. Now what is this due date to issue invoice? Let me tell you the purpose behind this. Government wants to pick up the contract date and make it as time of supply. Not literally the contract date. The date mentioned in the contract for payment. Let me give you an example. Say suppose there is a construction contract. Because to become a continuous supply of service, two conditions are required to be satisfied. One, the contract is for more than 3 months. Second, there is an obligation to make periodical payments. If these two conditions are satisfied, then it becomes a continuous supply of service. So if we take a construction service contract is for more than 3 months and obviously there is an obligation to make periodical payments, that is part payments. Now, say suppose the contract provides that by 5th of the next month, 2 lakh rupees has to be paid every time. Now the question is, contract says 5th. If I issue the invoice on 6th and payment is received on 7th, then what would be the time of supply? The law says the time of supply will be 5th because due date to issue invoice will be date mentioned in the contract. Think about it. 5th was the date mentioned in the contract. 6th I issued the invoice. 7th I received the payment, which is early. Government is using the contract date to make us pay GST based on such due date to issue invoice. Sir, if nothing is mentioned in the contract, then the due date to raise invoice is based on date of payment. If date of payment is to be used, please don't worry because then nothing can be done. In that case, time of supply will be invoice date or payment date. If you compare it with payment, it is still invoice or payment, whichever is earlier. Sir, if the contract says that payment will be based on completion, if first floor is completed, this much will be paid, second floor is completed, this much will be paid. If that is given in the contract, then the day first floor is complete, that becomes the due date to issue invoice. For example, if the contract says based on floors, first floor is completed on 5th, I issue the invoice on 6th, I receive the payment on 7th, what would be the time of supply? 5th. Why? Because that becomes the due date to issue invoice. So completion of each event would be regarded as a instance of due date to issue invoice. Clear? So there can be 3 cases. If payment date is ascertainable, then the due date to issue invoice is date mentioned in the contract. If payment date is not ascertainable from contract, then use date of payment. If payment date is based on completion of a contract, then completion of each event will be regarded as due date to issue invoice. Clear? Okay. Here, don't forget one more point. In case of associated enterprise, see associated enterprise, you learn in CA final direct taxes. But associated enterprise, in crude sense, it is related persons. In such cases, there can be instances where invoice is not issued. And if associated enterprise outside India is providing services in India, then I will have to pay tax under RCM. So for associated enterprise, the time of supply will be date of entry in books of recipient or date of payment, whichever is earlier. Oh, now say suppose you are not able to find time of supply from any of these. Then the law says for all the provisions, this is a common point, time of supply will be date of entry in the books of recipient. So date of entry in the books of recipient would be used if you cannot find time of supply from any of these. Sir, if entry in the books of recipient is also not there, then in that case, law has provided any other case. But before we go to that any other case, let's discuss vouchers and interest. So three discussions left: vouchers, interest, and finally we will conclude with any other case. Now, first talking about vouchers. See, vouchers, there can be two types of vouchers: identifiable, non-identifiable. See, identifiable vouchers are those vouchers which can be used only against a particular goods or service. For identifiable vouchers, the time of supply is date of issue. The day that voucher is issued, that becomes the time of supply. So, based on that date of issue, you are required to discharge GST. Non-identifiable vouchers are where you can use it for a variety of goods or services. Now you tell me, what do you think? Tax is on vouchers or underlying goods or service? Obviously the tax is on underlying goods or service. If it is a non-identifiable voucher, when it is issued, do you know the rate of GST? The answer is no. So that's why for non-identifiable vouchers, it would be date of redemption. And then, when we talk about interest, careful. Whenever it is a case of interest, first of all, you should recall that interest of any kind is exempt from GST. But if it is an interest on delayed payment for a taxable supply, then GST would be applicable. If the underlying supply is taxable, then the interest on that is also taxable. For instance, say suppose I am selling pens. Pens are liable at 12% and the other person delays it, payment. I charge interest. Then that interest would be liable to GST. Why? Because the underlying supply was taxable. If the underlying supply is taxable, then interest earned on that will also be liable to GST. Don't forget this. Otherwise, interest would be exempt. We'll discuss this in exemption video, but still, interest, if it is for delayed payment for a taxable supply, GST will be applicable. Let me test. Say suppose I sell alcoholic liquor. The other party delays payment and I charge interest. Whether GST will apply? The answer is no. Because alcoholic liquor is not liable. If alcoholic liquor is not liable, then interest on that is also not liable. Plus, if I talk about savings account interest, fixed deposit interest, personal loan interest, car loan interest, all these are not liable to GST. Remember, GST will apply only when underlying supply is taxable. Then interest on that will be liable to GST. And now coming to the point, what is the time of supply for such interest, late fee or penalty? Call it by any name. The time of supply will be when such interest is received by supplier. So the day supplier receives it, that would be the time of supply for such interest, late fee or penalty. Fair enough. The last instance in this is any other case. Say suppose you are not able to determine time of supply from any of these provisions. Then how do you determine time of supply? Because if you don't determine time of supply, no GST will apply. If the law does not tell me when to pay the tax, how can I be obligated to pay tax? Now, for that, government has given any other case. Now, if you cannot determine time of supply from any of these cases, then this can be used. Any other case has two parts. First, if it is a person who is required to file GST returns. Who is required to file GST returns? A registered person. Then the time of supply will be due date for filing GST returns. So say suppose a transaction has happened in November. The due date for filing GST return would be 20th December. So 20th December will be considered as time of supply. And sir, what is the due date for GST return? Next month, 20th. You can safely conclude that for now. Then, as you move towards returns, you'll understand the various due dates. But if he is an unregistered person, then he is not required to file GST returns. In such cases, the time of supply will be date of payment of GST. The day GST is paid, that day will be considered as time of supply. GST payment date to be considered as time of supply. Clear? So what have we discussed? 1. We started with goods industry. We entered into service industry. Forward, reverse, continuous. Forward, reverse, continuous. Entered into a special case where entry in the books of recipient will be used if this is not possible. If that is also not available, then you can use this any other case. For vouchers, you will go by identifiable, non-identifiable, and for interest, the time of supply will be when such interest is received by the supplier. See you all in the next video.